What's good, family? It's your man Harrison back again with another video. In today's video, I'm going to be showing you guys how we got the team involved in a trade and we secured the bag on a 1 to 23 risk to reward trade. So guys, let's get straight into it. Before we get into the video, definitely subscribe to the channel. Okay, let's get your boy to 50,000 subscribers. And don't forget to smash that like button. Let's try and get 300 likes on this video. Let's go. Just before we get started in the video, I just want to quickly show you the Telegram group where I drop the signals. So guys, if you're interested in signals and stuff like that, then holler at me on Instagram. I'm going to show you guys how to get involved in this signals group. So right here, this is the Telegram group where I drop signals, and as you can see, here are the signals that I dropped, right? So this was on December the 9th, okay? December the 9th, you got the times there, 11 o'clock in the morning. So guys, this was the first attempt at that trade, right? It was a sell limit on GBP JPY. Entry was at 140.20, right? And then this one hit stop loss. After it hit stop loss, I told the team to re-enter. So you can see hit stop loss, but still right direction, re-entry. And as you can see now, when I scroll all the way down to the bottom, as you can see, so where am I? So obviously all this is me just managing the trade, letting people know to risk for your trade with up 35 pips. It was at a 1 to 6 risk to reward, you know, just an hour or two later. And then as you can see, TP2 was smashed at 146 pips. And then later on, you can see TP3, where is it? This is the next day now. So you can see TP3 was smashed at 230 pips. It was a 1 to 23 risk to reward. So guys, now I'm going to show you guys how I actually got involved in that trade and why I sent out this trade idea. And so once again, like I said, if you want to get involved in these trade ideas, hit me up on Instagram, just type in trade ideas. So guys, let's go ahead to look at the trade now itself. Fam, this is GBP JPY. You can see down here, GBP JPY, we're in a 4-hour time frame, right? So a lot of people think your boy just stays on 1 minute time frames. No, I don't. I get my buys from the higher time frames and I get my entries on the lower time frames. And the reason I get my entries on the lower time frames is because it enables you to catch a really small stop loss. And so that means you're able to maximize your risk to reward. So the reason why they gained a 1 to 23 in one day was because the stop loss wasn't big. It was a 10 pip stop loss. So I'm not gonna lie though, 10 pip stop losses are big for me, right? But hey man, it was a 10 pip stop loss. It was a good trade. That's what I care about, right? So now check this out. First of all, what do you see, family? What do you see? So this is the portion I want you guys to be focusing on, right? So guys, this is how you was able to catch that 1 to 23 R to R. So first of all, you can see just a few things that you can just blatantly look at. So first of all, you can see blatantly, I can see a double top here. Okay, I can see a double top here. Okay, and you know what's above double tops. You know there is money sitting up here. There is a pool of liquidity sitting up here. Lots of retailers trying to jump in for sales and they're putting their stop losses all above this zone over here, right? So now check this out. Market is making higher highs and higher lows, creates the equal highs, and then what happens, they run them out. They run them out with this wick over here. That's the initial run, right? So this move up here, okay, this whole move up from this low here to this high here takes out all the rest of the liquidity resting above here. So now check this out. Higher highs, higher lows, higher highs, higher lows, higher highs, and then what happens? Price breaks down, okay, and produces a lower low. The most important thing here is that this move back down, yeah, broke back beneath the short-term low that took out the liquidity, right? So I'm gonna say that again. This move down broke beneath the short-term low that took out all this liquidity over here, right? All this liquidity. So this is the move that took out the liquidity, but this move down broke beneath the short-term low that took out that liquidity, right? So that's a beautiful sign. Whenever you see that, right, it just means that once you get a pullback, right, then you're good to enter the trade, right? So that's exactly what we was looking for. Everything is moving correct. Everything was moving in line. They had generated liquidity, they had run liquidity, and then this move up, okay, ran out the rest of the liquidity, and then the move down took out the short-term low that ran out liquidity. And then all you do is wait for a pullback, okay? All you do is wait for a pullback. Cool. And so what some people do, they bring out the Fibonacci tool and stuff like that. But your boy's not bringing out no Fibonacci tool, okay? I know some people do that, but it's all good. I'm not interested in no Fibos, Fibonacci or nothing like that. But look, just to show you guys something, right? So this is just one of the things that I look for, right? This is one of the things. There are multiple things. My mentees know about all of those, but I'm going to be sharing one of these things that I look for with you guys. And this is that institutional play, right? So this is the last up close candle, right? So when it comes to last up close candles are normally where banks and the big money movers are in drawdown, okay? So they buy first before they sell, yeah? They buy up before they sell, right? So that means they're in drawdown in this one candlestick here, one candlestick here, then drawdown in this one candlestick. So when they push price against them, yeah, when they push price lower, they're still in drawdown in this candlestick, yeah. So what do they have to do? They need to push price back up to that candlestick, yeah, to mitigate their position. And when I say mitigate their position, all I'm saying is this, is that they need to close out their buy orders either at break even, yeah, or in profit, okay, or in profit, right? And so what would happen, they will push price up, yeah, into that last up close candle. This is that banking, this is now, we're talking about institutional trading right now, okay? They push price up into that last up close candle, and then they sell price down. And normally this is what happens, right? This is normally the only time I bring out the Fibonacci tool, right? So what you will do, you bring out the Fibonacci tool and mark up the top of the body to the bottom of the body, and you expand it all the way out, okay? And this is what they would do. They would normally either come back to the open, yeah, of the candlestick to break even, or they'll come back to 50% of the candlestick. That's normally where most of the volume of that buy is, that 50% of the candlestick. And so once they return back to that area, okay, this is when you're gonna be getting that selling, okay? That's where exactly where you're gonna be selling that trade. So I'm gonna repeat this, right? Look at this chart. What have I put in this chart? I put a cross, I put an equal highs line, I put something for you to keep note of or to keep in mind. Okay, this is high time frame play, and I've used this tool just to mark up 50%. Cool, so now I'm gonna run this back one more time because I really want you guys to understand this, right? Because the liquidity gang, we're moving strong, but you guys, you need to watch the whole video. If you're not watching the whole video, then you won't be getting these kind of nuggets. This is why you need to watch the whole video, right? So once again, check this out, right? I'm gonna repeat one more time. They generate liquidity, as you can see. They run liquidity, little shallow run. Then obviously this is a little rejection, but then this rejection, this low takes out the rest of the liquidity. So if this is the short-term low that takes out the liquidity, then this is the short-term low that needs to be beaten. Do you understand? They beat it, right? With a nice strong candlestick, smash all this liquidity down here, take all of it with this wick down here as well, right? And then now they need to pull back because there's been a break in market flow. It was making higher highs and higher lows. Now there's a lower low. So what you expected now, you're expecting a lower high, right? And so now you have to wait for price to pull back to a certain point. So don't forget, this is just one of the things we look for. This is not the be all and end all. This is not just the only thing, right? But it will help your trading a lot. So you get that pullback. You get that pullback, right? But you need to know how far the pullback's gonna go. Some people might bring out a fib tool and start doing 61.8 Fibonacci, and you know, that's just like the retail Fibonacci. Some people might start doing that stuff. Some people might do 78, whatever they do. I don't touch none of that stuff. I look for where the banks are in drawdown. So if this is that last up close candlestick, right? I'm gonna measure up 50% of that last up close candlestick and trade it back up to that level. You trade it back up to that level, right? Because obviously your boy's gonna take it both ways, right? So then once it gets back up to that level, this is where you're gonna bust that sell, right? So once again, sometimes they return back to the open, sometimes they return back to the 50%, okay, of that kind of stock. So this is why the first trade that I dropped was a stop loss hit, because I did it just above the open, okay, and then it just continued just to, they knew we were trying to sell it down, man, so they stopped us out, okay? And then I just told the team, look, we're still good to enter this trade, let's go. It was a 1 to 23 risk reward. You saw that our targets was 137.90, 137.90. This was our target, right? This line over here, 137.90, roughly about, let me just make it perfect, 137.90. So that was our target from our trade, right? I got in a lot higher, obviously. I got in at 140.30, I got in at 140.30 something, 32 or something like that. Let me just see what I got in real quick, because this is my clean chart. I've got another chart. I got in at 140.30. Okay, so you can see 140.30, but this is where I got the team in at 140.20. This one here, right? So GPJPY, let's go back. So I got it at 140.30, but I'm not gonna put mine in. I just want to show you where the team got in from, right? 140.20. So it was roughly about 140.20. Let's put it here, and it was a 10 pip stop loss, 140.20. Where's my entry? 0. Stop loss was 140.30, and TP was 137.90. Boom. So guys, this is perfect, right? And all I did was I targeted this low, because the safest bet is to target this low, because you know that for them to continue a downtrend, they need to beat this low. And so this is why I targeted this low down here. So now you know how I got into the trade. We used the banking institutional entry down here, okay? You know where we targeted, which was the low, right? Because in order for them to continue a downtrend now, they need to be that low. So this is why sometimes it baffles me, that some people are a bit confused about where to take profits and stuff like that. But look, if you just zoom out a little bit and just understand what's going on with the markets, you know exactly where to take profit. You know, for them to continue a downtrend, they need to beat this low down here. Hence why TP was set down here. And now they've beaten this low, they might even pull back up. They might pull back up and then we go down again. So anyway, family, that is what I really wanted to show you guys. I wanted to show you guys how I was able to trade and catch a 1 to 23 risk to reward trade on GJ, guys. It's been an absolute blessing of a trade. I know a lot of you guys are going to be hitting me up about trade ideas, but look, like I said, holler at me on Instagram, type in trade ideas in my DM, and then I'll show you how to get involved in that. But anyway, guys, hopefully you guys took value from this. Hopefully you guys learned this stuff, right? So I decided to share one more thing with you guys before Christmas, man. This is like my Christmas present to the whole Liquidity Gang family. So if you took value from this video, I want you to do something for me, man. I really want you guys to comment down below something positive and smash that thumbs up button, okay? Smash that thumbs up button. Let's try and get 300 likes on this video. And don't forget, get yourself some merchandise. Go below to the website and get yourself some merchandise. And that would be super lit. A couple folks, just rocking that Liquidity Gang merch. And we've also got a Liquidity Vibes hoodie, but instead of vibes, I called it Vibes, okay? VABZ, okay? So go and get your hands on that merchandise as well. But anyway, family, thank you guys for watching the video. Remember to subscribe to the channel. Let's get your boy to 50,000 subscribers. Other than that, have a blessed week. Peace.